The RBA raised interest rates another 50 basis points in July. Market expectations are that interest rates will rise by 1.5 percentage points by the end of this year. That's equivalent to more than one 25 basis point rise at every meeting. The pace of interest rate rises we've seen this year has been very brisk. In fact, it's rare that the RBA raises by 50 basis points in a single meeting, let alone two back-to-back. The last time the RBA raised by 50 basis points was actually early 2000. These rate rises are already flowing through to higher repayments for mortgage holders. Since April, monthly mortgage repayments for a typical recent purchaser have risen by $580 in Sydney, by $430 in Melbourne, by $330 in Brisbane, and by $300 for someone who bought in Adelaide. Of course, not everyone will see their mortgages rise by this much. People who've bought in expensive suburbs and thus have larger mortgages will see bigger increases in their repayments. But these households tend to be well off and tend to be higher income, and so probably have the capacity to pay higher mortgage rates. Rate rises also make it harder for prospective borrowers because it reduces how much banks are willing to lend you. When a bank assesses you for a mortgage, they compare your potential repayments against your income. And as interest rates rise, so too do those potential repayments. That means the bank is willing to lend you less. We're already seeing the impact of these changes flowing through to house prices. In June, house prices were down 0.25% nationally, according to the PropTrack Home Price Index, and they're now off a little more than 0.5% from their peak. With interest rates set to rise through much of this year, prices are likely to keep falling through this year and into next year.